And it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every Wednesday at 5 p.m. London time, only on Bloomberg Television.
The top names at the Fed are on Bloomberg.
I have projections for unemployment. I have projections for inflation. So do my colleagues. And thus far, the evidence from events over the weekend haven't led me to change any of my forecasts.
With the geopolitical events that we talked about, it's just too soon to know what imprint this has on inflation and for how long.
We've seen the economy overall. It's been pretty healthy. It's been brightening. The outlook has been positive.
I'm just watching prices at the pump. They've jumped up over the last week. You can see that when you drive around. But of course, no one knows whether this is going to be short-term or long-term, and so we'll just see where it goes.
Inflation's hot. It's going to look even worse now with the oil prices, at least on headline. And then if you get a solid job number, it does say you can sit there and wait.
It can lead you in a stagflationary direction. The inflation side of the mandate getting worse at the same time the employment side of the mandate is getting worse, and that's always the worst case scenario.
Nobody covers the Fed like Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance. We're talking about it.
Up to the minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Looking at a market at session highs in the United States after a number of different back and forth discussions about a ceasefire. Yes, there have been a number of projectiles, et cetera. However, discussions on both sides seem to have, at the moment, on one hand, a cessation of some of the escalation risk, and on the other, the promise of allowing ships to go through the Strait of Hormuz. Right now, you're seeing equities across the board. S&P futures higher by 2.6%, 3.4% gain on NASDAQ futures, Russell 2000 up 3.5%. Meanwhile, the real drama has been in Europe, both on the equity side and on the bond space. You can see a surge into some of the fixed income products in the front end of the yield curve. In the UK, two-year yields down 25 basis points to 4.16%. In Germany, the two-year yield down a similar amount to 2.48%. In the U.S., a 5% decline to 3.73%. All of this being driven by oil. Oil prices plunging on the prospect to an easier flow through the Strait of Hormuz, down more than 15% for both Brent and WTI. 1 hour away for the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. The airlines were already up on ceasefire relief, but they are up even higher after Delta reported earnings. The airline beating expectations with strong demand from the premium and loyalty members, helping cushion a more than $2 billion fuel hit it expects to incur through June due to the war. But this idea that there is a resolution in sight is helping to lift the entire sector, with United and American also up some 12 to 13%. And as we see oil pulling back sharply, we are seeing pressure on the U.S. Domestic oil players. These names had run up big during the conflict. Occidental up until yesterday up 16% since the war began. Exxon up more than 10%. So you are seeing this reversal today as investors lock in those gains. And another clear beneficiary of the ceasefire is the tech trade. We are seeing names like Meta up 5%, but these names had been hit hard during the conflict as higher oil prices and inflation fears pushed rates higher. But as that pressure starts to ease, you are seeing investors rotating back into this more growthy part of the market. Lisa?
Thank you so much, Yahira. Let's turn to the Federal Reserve. Investors looking for signals from the central bank's meeting minutes due out at 2 p.m. Eastern. Bloomberg's Michael McKee joins us. Mike, is this just ancient history, or is there actually going to be some tangible information that we can glean?
Well, there's always the possibility of tangible, important information that we might get, but this is largely ancient history. It was 3 weeks ago. The war was just beginning, and nobody knew where we were going. We still don't really know where we're going, so it's hard to say that we have any kind of justification for putting any hope on rate cuts at this point, but the markets are starting to price that back in. You look at December, and there's about a 50% chance right now priced into the markets that the Fed will be cutting rates by then. We'll see how that develops over the next couple of weeks, because we've got a lot of data and a lot of work to do on a peace deal as well. You look at what Fed officials were saying during the war, and I guess it's still on officially, but there are about half and half of the Fed officials who are at this point saying we either want to stay on hold or we might be looking at raising rates because inflation is going up. Now, if inflation stops going up, then that group will become smaller. But there's still a substantial number of people who are on the hawkish side and have been, not just because of the war, but because for 5 years they haven't gotten to the 2% target. It's kind of significant as well that there are only 2 people who've spoken during this interregnum that have said that we should maybe think about cutting rates. Stephen Myron, of course, but he won't be on the Fed much longer if Kevin Warsh is confirmed. And Chris Waller, who said if prices go down, then we can start thinking about cutting rates again. So it's all going to be about what happens with prices going forward. And we have a lot of inflation data coming out very soon. The Fed minutes aren't going to tell us much, but CPI on Friday is going to be very influential in the markets. And we also get PCE tomorrow. The PCE is February, before the war started, but it gives us a baseline for the Fed's favorite indicator. Then we move on to seeing what happens with import prices and wholesale prices. And then we have the Fed meeting on April 29th. Also, Fed's going to be interested in what the Michigan expectations for inflation are. Are Americans pricing in higher gas prices for the time being and starting to think inflation will continue? So a lot to look forward to, a lot of unsettledness, but I'm not sure we get much of a guidance out of the minutes today.
Michael McKee, thank you so much. An honest assessment of what we can expect at 2 p.m. Eastern today. CPI data due out on Friday. That will be not sleepy in any way, shape, or form, giving investors the first look on how oil prices are stoking inflation. Tom Porcelli, chief economist over at Wells Fargo, writing, the March CPI report will put an abrupt end to the gradual disinflationary trend in place over the past 2 years. Tom joins us now, and congratulations. It's been a while, I know, on your new seat. But I'm thinking more broadly here, you were in the disinflation camp.
Yep.
Something has shifted.
Yep.
Why has it so fundamentally shifted, even with a potential ceasefire?
Yeah, so I think what we have to keep in mind is that, you know, if we look at sort of the things that are really sort of putting a floor beneath inflation right now, there's a couple of them. One of them, of course, has been this sort of this transportation component, which has just been sort of, you know, enduring, right? We keep on seeing these airfare price increases. And that's been true over the course of the last, you know, sort of handful of months. It's been volatile, to be sure. But obviously now, over the next couple of months, it's very easy to expect that the transportation component, and specifically airfares, will lift inflation. And in fact, you know, come Friday when we get CPI, I mean, that's exactly what I think we should all expect. In fact, we're looking for the month-on-month to increase by a full percentage point, which is sort of an outsized gain, needless to say. But if now all of a sudden here we are at 85 on WTI, if that's maintained, then all of a sudden as you roll into the April report, then all of a sudden you're looking at flat prices from a transportation perspective. So a lot of volatility. But I think, Lisa, it's funny. The thing that we've really tried to drive home to investors is it's not just about this kind of inflation that is really being impacted by Iran. Really, at the end of the day, I think what's going to really matter maybe even more, inflation expectations. And inflation expectations, if you look at the 5-year forward in inflation swaps, if you look at the 5-year forward measure or if you look at the 1-year forward measure, they've been incredibly stable. So I think that really actually sort of will lend some comfort to the Fed and why we've continued to expect the Fed to cut rates.
I love Cameron Dawson's comment of New Edge Capital. She came on earlier and she said, find someone to believe in you the way that the market believes in the Fed reaching its 2% inflation target. Is there going to be a certain point where markets realize, if we haven't had a 2% inflation rate going back more than 5 years, and there's no real hope of it in the near term, that we're just essentially giving it up for good?
And so this is part of a much bigger conversation. I will be very, very brief on this, or brief for an economist. So I actually hate the target. I hate that there's a 2.0% target, mostly because, one, it sort of borders on hubris to think that you can actually hit 2.0% with any degree of precision over any long period of time. I mean, we spend a very limited amount of time at 2.0%. I think the RBA, the Reserve Bank of Australia, actually has a much better approach. It's a range. That, to me, is a sort of a better way of thinking about it. I think bringing it back to the Fed, I think what they are going to sort of come to grips with, and I think this process is already underway, is that if you are sort of, in the 2% zone, that's going to be enough for them to feel comfortable. And by the way, if anyone needs sort of the proof in the pudding on that, the Fed still has cuts built into their SEP. So even with inflation north of their target, I think it's more about what's going on beneath the surface. And you and I have talked about this many times over the last year or more. If I just swap out OER for something like Zillow or apartment list rents, you're already below target.
Well, putting that aside for 1 second, a lot of people are coming into this situation, seeing the war in Iran and saying this is going to add not only a risk to inflation to the upside, but also to growth to the downside. Yeah. And this is sort of the key question mark in a lot of people's minds, especially as we get earnings like the one from Delta, where they're outperforming and they can increase prices. They're going to cut capacity to do it, but they are going to maintain some of their profit guidance. Yes. Given that, I mean, where's the stag? And are we looking at a situation of just inflation that's significant with above trend growth for a prolonged period of time?
So I'm a fader of the stag part of this. I think what we have to bear in mind is that before Iran, we actually had fiscal tailwind. Right? That was going to be very notable. In fact, we actually would have argued that pre-Iran, you were looking at 3% growth in the United States this year, right? Like we were well above consensus. We'll pare that back a little bit, just given what's happened over the last couple of months. You're still going to be sort of well above what I think consensus probably still is. So the question that we had been asking ourselves over the last couple of weeks was it going to remain this fiscal stimulus? Was it going to remain a tailwind, or was it going to be a shock absorber? Right, because the longer that this endures, right, the longer energy price increases remain, the more it becomes a shock absorber. But if this is the exit ramp, right, if we actually have found an exit ramp, which is an open question, but if we have found an exit ramp, then you still get the fiscal tailwind part of this, and you can actually have a pretty good growth year.
How much is this also predicated on true productivity gains coming from the likes of AI? There was a study that was put out by the Fed showing that the population has shrunk for the first time, or the most going back to the 1950s. And ultimately, you cannot have an economy that grows at the same pace that it has traditionally if you have a shrinking population, unless productivity really picks up. I mean, how much is this all just predicated on the AI promises?
So I would say productivity is going to be a critically important part of this entire conversation. Is it critically important today? Actually, I would argue that one of the key reasons why we're actually seeing productivity improvement, I mean, just think about what productivity is, right? The math on that is very basic. It's basically output minus hours. Output part has actually been doing, sort of decently well, as we all appreciate. The hours part, though, has been getting clobbered. And that has been flattering productivity, I think, in ways that is really underappreciated. So you're getting the productivity lift that actually, we would argue, has very little to do with what we're seeing from a tech spending perspective, whether it's AI or otherwise. But as we continue to move forward, there's almost no question that you're going to see this sort of AI really kick in. But I want to stress something. If I look at AI usage by sector,
no tengo algo muy estricto, sino que es más bien la acción del mercado y también cómo me siento acerca de
It's going too green. Too much green, but it doesn't look in the chart. So maybe we have a squeeze if it breaks below. Big order there, but not big movement. Big orders. Another block orders. Now it's looking super big order. It is 6 minutes to the open. We are gonna look what's going. Psychological level also. We are getting crack. I'm doing like shit. Climate volume and then volume decrease. too much big orders, but the move is down. Stars to market is gonna will is it's gonna be open on 20 seconds. I am in. I'm marking. Oh. quite sad for me because I was almost 13 plus 13,000 up, and I almost flash on the day trying to catch this move, this down move, the fading on the Nasdaq, and also the fading on the DAX. I took some good trade. I took the most of the trade, but then I flip it another time. I tried to catch the bounce in long position and then catch another time the short position, and I stop it numerous times. And now it's starting to fade another time, but have too much stop losses here today. But it is a competition, so yeah, I have to go full size all the time. Okay, it should fade here. The movement should fade. This is the original idea. Actually, I am thinking the same. This should fade because this is the Trump knew that they stop like 2 weeks the war. So I don't know how to say it. They have a truce. Yeah, they have a 2 weeks truce. So this is the new was overnight. I was catching the fading on the DAX almost all the day, but I'm sorry, but the Nasdaq didn't fade, but it's fading now. You can look at, for example, big orders appear something like here, and also in this candle. Look, the stick was big orders, but the sellers took this on a range. It didn't work. The buy position. Look now, the tape was taking lows. Super big order there, but not big move. It should drop. It should. It's for another big orders. The tape. We will see, but it should fade more. Another time, super interesting move. Big orders, a lot of times green the tape, but nah, the red is coming. Whoa, super big order there. I don't know if this was a mistake, but it looks like not, because it gapped in 1 minute. Maybe it's the data, but I believe that was not, but what was a big order. But then it drops. Interesting. And it's not liquidity issue because it's 10 in New York, so oh my god, 30 minutes after the open and with liquidity issues is almost impossible. Okay, this should drop, but it's gonna do it super slow. So maybe it bounce, drop a bit, bounce another time, drop a bit, and it's gonna fade almost all the day, I think. So it's going to be super boring day. Yeah, watching the tape, this is tough. So I prefer let it run and go to study and read about the markets than being in front of the window. Uh, 20 seconds to close. It's in the pullback, so now it should drop a bit, and then it's gonna bounce and drop a bit. I will target these levels. But we will see. I'm gonna look another time on the lunch break on your section. So 50 minutes close. The market is like this. I was doing super bad on the morning. In the morning I was doing good, but on the lunch break I started to do it bad. 12 more or less. I didn't do most of the trades on the Nasdaq. I did here. I took almost all the shorts here, and then I just played it before. Yeah, I flip it too long and also got stopped it a lot of times in short position trying to get the bounce. And now we are waiting, just waiting to do the move. Today, at what time is the bloom? Today it's going to be at 8. The the Fed meeting in 4 hours is gonna be. We will see. Okay, see you in a bit.